Tuesday offered a popcorn-worthy day of drama as Starvolt had some of its maddest swings in a long time. But was this local peak it, or was it simply the beginning of something much more interesting? In last week's episode, the game plan, linked to at the end of this episode, I thoroughly outlined that Starvolt's temporary technical top would be at 0.28. I will sell off a portion of my position at the horizontal 0.28 resistance, and even more if it were to coincide with the diagonal resistance, which already has 3 confirmed touches. And so, to all of you who sold off your Starvolt swing positions at 0.28, you're welcome. I personally had a big sell order out of around 70% of my entire Starvolt position, unfortunately of which only a very tiny portion went through. In hindsight, I should have known better and slightly lowered my sell order to the 27 range instead, as technical peak of the peaks like these tend to occur under very limited trading volumes, particularly in penny stocks. Having said that, Starvolt's northbound journey might just not be over yet. In this episode, we will look at both the current technicals, but also compare them to how Starvolt has behaved in similar historical situations. By doing so, we can properly assess a broader picture and determine the most likely outcomes from now on. But before I say anything else, do note that nothing in this video is financial advice. These are my own interpretations only. Now, let's get to business. An alpha testing was launched on Tuesday, which was also the event that people had positioned themselves for. In little over a month, the price had gone up from a low of 0.065 and all the way up to Tuesday's peak at 0.28, a 330% increase, which on its own should qualify as an explosive move as discussed in previous Starvolt technical analyses. Steady increases prior to long-known sensational dates, such as the alpha launch on Tuesday, is certainly nothing new in this stock. Looking back at Starvolt's trading behavior, we quickly notice that this is a frequently recurring one. We're talking weeks of price increases which are then followed by steep sell-offs on whatever release day or release topic it may concern. We saw this very same behavior working on all cylinders on the Steam release date in July 2015. The price had gone up from a low of 22.30 to a release date high of 94.93, a 325% markup on sold release date expectations. On the Steam release, the price quickly peaked upon market opening and then rapidly plummeted. I remember, for I sold my entire position off immediately upon opening as I realized the hype turned into an anticlimax already after a couple of minutes. 1 year later, Starvolt had went on to lose 83% of its company valuation for a multitude of reasons. First of all, the Steam release was a fiasco that didn't bring in any volumes of new customers whatsoever, despite all the hype. Another factor was the company's lack of communications and frequent begging for more money. At the height of this disappointment and grand promises, people had simply had enough. Now, Starvolt is trading under very heavy trading volumes. That is, heavy trading volumes in comparison to any normal Starvolt trading day. The wild swings we see are people taking profits from the 300% markup in the last month and a half. And do note that no less than 80% of the stocks changed owners in a single week in November 2019. And on Tuesday alone, we saw almost 1/4 of the entire company stock being traded. The heavy sell volumes and price swings can easily be explained as massive profit takings. And now new blood enters at a higher plateau. This is of course no guarantee that things will continue up, but it sure is a good sign. Many of those new buyers are people who take positions due to fundamental expectations, as the company has begun to outline news which could result in the company's long sought after breakthrough. On a pessimistic note, however, we have had roughly one such promise for each year since the launch in 2007, and those surely haven't gotten us anywhere yet. Now, another bunch of the new stock owners has bought in for technical reasons, as the price has finally pushed its way past some heavy technical resistances, such as the EMA 200 on the weekly, the resistance box between 1550 and 1750, and also having taken out a new local high after almost 2 years. All these things are strong indications on their own, but before we discuss Starvolt from a collected point of view, let us take a quick look at the current technicals. The horizontal and diagonal resistance that I was talking about in the previous episode have been hit. The RSI as of Tuesday, both on the daily as well on the weekly, are at record level highs. For that reason alone, I don't see how we would have the power to push through the 28 level resistance without a temporary correction, one that we even managed to get on the very same day as the peak. Normally this type of dire price decline is bearish, but in Starvolt it might very well be the opposite. Let me get back to that in a bit. But with regards to the RSI, it is of high relevance how far it retracts. For some reason my charts still have not uploaded its data, not even that of Tuesday. In that sense, please bear with me as I will need to use some visually subpar charts to illustrate some points. I guess it's the curse of penny stocks. On Tuesday's wild trading day, we eventually had a double bottom test of the previous strong support and resistance box at 1750, which also coincides with the EMA 200 on the weekly and the 0.5 Fibonacci. And when we look at the chart, we can clearly see that the biggest local trading volumes took place at the 28 resistance and at the double bottom at around 18. This support signifies strength and that the buyers are by no means done, many of which I suspect were sellers at 25 and above and who then wanted to buy some of it back in order to free roll. On Wednesday morning, the price again retested that very same support level, this time dipping slightly lower than that of Tuesday's double bottom, but still respecting the key support levels. This on its own is a bullish sign, and as long as we remain above the key support levels in terms of EMAs and horizontal support, the stock is still in bullish territory. Now, these individual technicals won't give us too much to work with on their own. On the contrary, they can be rather confusing. Sure, we are trading above all the key support levels, but this is Starvolt. And penny stocks can often behave vastly different than normal stocks. For this reason, in order to get a clearer picture, we need to look at how Starvolt has behaved in similar price developments historically. This is also where things get truly interesting, as certain patterns begin to emerge. For contrary to what some may claim, history actually quite often does repeat itself. For stocks, price movements are simply a manifestation of herd psychology with regards to supply and demand. Nothing else, and the patterns we have seen in Starvolt are to a good extent unique. For you would, for example, never see a 2000% markup in Microsoft over the course of a few months. The best way to sum up Starvolt's stock behavior is a constant bleeding to lower lows and with seasonal explosions to the upside followed by immediate crashes. Now, some key historical comparisons to the present event would be the upwards outbreak in mid-2013, April and June 2015, and April 2018. Back then, these outbreaks were also preceded by steadily lower prices, and after each outbreak, the main thing to look out for was the aggressive reclines, all of which bottomed out at around the 786 fibs and the EMA 200s on the daily, after which prices typically continued further up than the previous highs. In any normal established household stock, continuous retracements to the 786 fib would be a great sign of weakness. Under normal circumstances, this would typically be the spot where you would try to get rid of your position, as it would be an indication of lower lows to come. But bear in mind, as I have spoken of repeatedly in the past, the markets can't reward us all. For that reason, penny stocks like Starvolt that regularly go parabolic with short-term hundreds or 1000% profit sprees tend to do so with wild and vomit level swings in order to shake out and scare as many stockholders as possible. And to further complicate things, support and resistance levels are of little or no importance when prices hover around in a formation creation, such as a flag, pennant, triangle, etc., or when prices temporarily correct before preparing for another upwards movement. For this reason, we must take the cluster of support with a grain of salt. We have just touched the 0.5 fib, and given that we may very well be preparing for another move to the upside, this cluster of support may need to be neglected for now. In this sense, the 768 fib and the EMA 200 on the daily are still in play, and hence we may still have a long way down to go without being bearish. In this case, we are talking about the 1050 level at which both the EMA 200 and 768 fib beautifully coincide. Another key aspect to add to the mid to long-term mix is how big of an impact the global indices will have on such a small company as StarVault, as we have now closed in on the cluster of index resistances, of which I have already talked about at length in the last month. If you still haven't watched these 3 episodes, I strongly recommend that you do, for I still expect an index markdown at either the 0.5 or 618 fib levels, and I don't see why StarVault would be spared from any short-term psychological damage. Quite the opposite, for once global indices plummet, penny stock companies like StarVault will crash and burn. We have recently seen this happen during the market crash of February-March already, as StarVault lost roughly 2/3 of its company valuation in a matter of 3 weeks, upon which they made a grand recovery alongside the indices. That's when we see 300% moves to the upside or more, just like we have in the last month and a half as indices have rallied. Short term, I do expect StarVault to fall too, as indices still lead the way for individual stocks. But in time, and once the smoke scattered, stock will again proceed to live their own lives. That is the time when companies who flourish despite the pandemic will show their true colors. And who knows, perhaps StarVault will be one of them. To sum it all up, my decently predicted sell target at 28 did take place, albeit my personal sell position didn't go through. I will still keep my original position just in case I'm wrong, because there is certainly still more explosive potential left in StarVault, probably even more than the one we have seen already. Given the technical data at hand right now, StarVault still has a short to mid-term potential of going as high as 50. But here is the scenario that I hold for most likely. We have now reached the cluster levels of resistances on the OMXS30 index. If and when the index falls, StarVault will very likely follow suit. In this case, I expect it to test the 768 fib and the EMA 200 on the daily, just like it has done so many times before prior to shooting upwards. And as I don't expect the OMXS30 to break through the critical 1240 area just yet, we would be in for another bounce to the upside, which is when StarVault would be at its most likely to utilize the remainder of the explosive fuel it has stored up. In such case, I would not be surprised at all if we were to test either the 34 or even 50 level. Quite the opposite, I would rather expect it. And if we reach the 1050 area and the OMXS30 reverses upwards, I will not be worried, but rather busy myself in laddering in heavy longs in StarVault. That was all for now. Thank you and goodbye.